Okay, good afternoon, everyone. This is Joe Henches with Beyond the Chart, and this is the weekend stock market update. Stock market today. Today is February 8th, 2014, and the title of my post is "The Real Thing?" Is question mark. Is this the real thing? Let me go back. First, we're going to come back to Baidu. We'll talk about Apple and Baidu at the end. I usually talk about them on the weekend, so we'll look at them. First thing, we start off with the Dow Industrials. Had a heck of a two-day bounce here. Let me get rid of this for real quick. Up 165 points yesterday and 188 on Thursday. I thought we might get resistance in here where we kind of had support, but clearly that didn't happen. It broke right through that yesterday, and it's closed above the 10-day exponential moving average. So the real test, and you're going to see this on several of the indices in here, the real test is going to be, do we stay above the 10-day and we continue to push, or do we pull back down and close below the low and below the 10-day at the same time? That's going to, and if we do that, there's a good chance that we'll turn around and roll right on back down and continue to push to the downside. So that's why I think the next couple of days, 2-3 days, is going to be pretty critical. This ratio we're talking about is I looked at the advanced decline ratios for the first couple of days coming off the lows, and I averaged these 2 days, and it's only 1.42 stocks to the upside for every one to the downside. So not a very strong move on the first 2 days. Now, granted, it got stronger the last 2 days, but these first 2 days were kind of weak, and one of the weakest first 2 days coming off a low of the last 18 months. You look at December, you look at October, you look at August. August was fairly weak too. So this, I'm not saying that we can't rally. I just don't think, based on this type of ratios we're seeing, I don't believe we're in some new leg that's going to take us to new highs. I will be really surprised if that's the case. I think we may continue to bounce, but like I said, the next 2 or 3 days are going to tell the tale. When you look back to when this market kind of kicked off, the end of 2012, the beginning of 2013, 8 stocks up for every one down in the first two days after that reaction low. 5 stocks up for every one down when it kicked off in November. And when it started the 5 waves up back in June of 2012, almost 5 stocks up for every 2 down, coming off of these first 2 days, counting this little day here. So again, I think this is kind of a weak start in here, and we're just going to have to see whether or not it continues to gain momentum or whether it rolls back over. Let's look real quick. The weekly, a little bit of a reversal bar. Of course, we closed on the high for the week almost. The high was what, 15,798. We closed 15,794. And the S&P 500, again, we've got the same type of pullback on the S&P 500. The S&P 500, though, has pulled back even more than the Dow. It's pulled back almost 50%, I believe. If you look at the retracement, you measure from the high down to the low here. It's pulled back a little bit over 50%. But again, like I said last week, or earlier this week, it's broken this 14-month trend line. It didn't get as low as weak as the Dow did in terms of the 200-day, but we're going to have to see how again, it had a little bit of a reversal bar. Just have to see how these first 2 or 3 days play out this coming week. Nasdaq, or the New York Composite, similar type scenario. You can see it got all the way down to the 200-day. We've snapped back. The Nasdaq, there it is. Nasdaq is not nearly as weak. Look at how far above the 200-day we still are. Either that's a sign of strength or the fact that we've got a heck of a lot more to drop. But it's been, the strongest of any of the indices so far, without a doubt. We don't even have the 20 below the 50 yet, like on the other ones. So again, excuse me, do we stay above the 10, or do we close back below this and roll over? Okay, let's take a look at a few of the indicators here. The high-low index, 61 new highs, or net highs greater than new lows. And it stayed pretty much in the center here, in the middle. And we're kind of still in this downward trend. Short-term trading index. Another kind of a low reading, 3 out of 4 days. We've had kind of a low reading here, but not to the extreme that I would sit back and say, okay, it was a high point. And the 10-day exponential moving average, the blue lines pulled back into the middle. Again, you saw this extreme bar that we got here on Monday. It may be the sign that it was the short-term bottom. We'll find out. And the VIX has collapsed back down here. I wouldn't be surprised to see a bounce on the VIX, which would correlate to a pullback on the market. So we'll see, kind of like what it did here. This moves contrary to the market. So when the VIX collapses back, that means the fear index is dropping, and the stock market usually goes up when the VIX stays low. When the VIX goes up, the stock market's collapsing, and they're putting fear in the pricing, the premiums of the stock options higher. So it's an inverse relationship to the market. And I think that's it on those. I did want to look at the XLF, the financial ETF. And this is, again, the DI minus is greater than the DI plus on this. So it's broken this trend line, this long-term trend line. We've got the snapback, very similar to the rest of the indices in here. So we'll see whether or not this continues to push higher. And now I think I want to go ahead and take a look at Apple and Baidu. Apple's had a pullback here. This is the post. Get rid of this. This is the gap that happened, the big drop day after the earnings, and then we pulled back. We've snapped back. Now, this is the congestion in here. The average closing price from here through here is 521.06. This seems to be where it paused yesterday anyway, and we'll see how much resistance we get from this price congestion in here. You know, when you break back through something, when you break down through something, it has a tendency to become resistance on the upside. So again, this is acting just like on the indices. It's above the 10-day exponential moving average, and we'll have to see, do we get a close below the low, and then at the same time a close below the 10-day. That's what I'd be looking for to see continued action down to the downside. The retracement on this move, if you go from this high down to this low, has been, I don't know, it looks like about 40-45%. It's right between the 38 and the 50. So it's right in that typical kind of a pullback. You know, any of these, it could be anywhere up to 61.8% as a typical retracement in here. So we'll just have to continue to watch that one. You know, and if you're new to this, I'm expecting this breaking out of this wedge. I'm expecting this to continue rolling and come down and retrace all the way to the bottom of this wedge. This is I view this as a bear market rally wedge in a move, the initial move down from the peak, from the top, and we've rallied. We're breaking on down out of it. So we'll just have to see whether it morphs into something else or whether it continues to the downside. Now Baidu, there we go. Okay, Baidu's had a snapback rally also. Again, I think we've got 5 waves in on Baidu. This is actually the 4th wave. I think this is the 5th of 5. So I think we're definitely pulling back down. We've broken this like 7-month trend line here. And, you know, we've got these gaps down below. Gaps eventually close, just a matter of how long it takes to close them. And so those are potential targets as we start to move on down here. And again, what I'd be looking for is a close below the low of this on Friday's action. So that's it on Baidu and the market update for today. We'll be back tomorrow with trade ideas, and we'll see what we've got, review the trade ideas from this last week and look at any new ones for the coming week. Have a great Sunday. Talk to you soon.